everyone, and welcome to the first episode of Reversions and Diversions. My name is Monica. I will be the product and technology section of the channel, and I'm here with one of my best friends, Lily, who you know as the mother of Nope.
I'm Lily. If you haven't heard of me from my constant Twitter shitposting or also the surreal past 2 weeks we've had together. For our first episode, we're going to mostly focus on Nope, this channel in general. I'm hoping to bring some cool people on it for interviews, as well as on my end, I'm going to talk mostly about like the market and finance and, honestly, whatever people bother me about, I'll just make a video.
So she's the reversion part of it, and I'm the diversion who will talk about whatever matters in the moment. And so, yeah, as Lily said, we're going to start off with a little bit of Q&A just to let you guys know a little bit more about Nope and answer all the questions that you guys have been asking. And as you all know, it's been a little bit of a whirlwind kind of. All of a sudden, it's like one day, no one knew what Nope was. Then, well, first of all, you came up with Nope yourself in my apartment while we were just hanging out and watching TV. So I guess before we get into any of the Twitter questions, do you kind of want to explain a little bit about that and kind of like how you started, I guess, thinking about the idea for Nope and kind of how you got into options trading in the beginning?
Yeah, I mean, so we actually got into options trading together mostly because we always do like the worst ideas together and come up with schemes. So this was like right after the market crashed and everybody was like downloading Robinhood, and it was like, okay, we're gonna get into the market to like make some money. So we basically started trading together in May when that was when we did the bulk of like trading together. Everything went up. So really any like idiot, I mean, still the case, honestly, any idiot could have made money in the market. Around June, it got more, volatile. I mean, with the June correction where I know a lot of people who their accounts got blown out. But Nope kind of arose because around July, I would say like all the easy money, at least, for a new trader kind of disappeared. So it's like, okay, maybe it's time to like look at this quantitatively again instead of just buy call on random stock and just, make money. I mean, I remember one of my favorite anecdotes was like, there was like one night where I just bought a call on Boeing when it went from like 180 to like 210. And you just like wake up with like $4,000 more. And it's like, you gotta understand.
I would think we went in on that trade together. That was like probably one of the first trades that we did together.
Yeah, and it's like you don't need to understand anything. It's like it's like the same thing as a Robinhood interface now, where it's like if you think it's going to go up in money, buy a call. If you think it's going to go down, buy a put.
Buy put. Yeah. So we kind of started by collecting a few of the questions that people had about Nope and the market in general on Twitter. So I guess the first question, can you explain Nope to a 5-year-old?
I get this question a lot, and I mean, I would say the best analogy is friction. I'm going to go more into detail about like what the net options pricing effect is. One of the questions I got from Macrocephalopod on Twitter was like, did you back him in? And the answer is like, obviously. When I, first started investigating Nope with the team, it was the options pricing effect because, I mean, it's pretty self-explanatory. It's the effect that the option market has on price. So option pricing effect, I'm a computer science person, so naming is not my forte. It became net options pricing effect because it's sort of a net, I kind of explain it. It's basically the net delta in the same way that Panda Express is Chinese food. It's like if you squint like a lot, it looks like net, but it's not. It's not. Nobody who actually, knows Chinese food would call Panda Express Chinese food. So
makes sense to me.
I mean, the net option pricing effect really is like the weight of the options market on price. So I actually recently published a blog post, the first part of a series called Option Degenerate Marketplaces, which effectively says that because of the existence of market makers or the existence of derivatives, to even be more precise, there exists a skew in like the direction that price should move. And that's because dealers need to hedge their positions, so they don't like to have risk. They don't like to have directional risk. And because of that, as the price moves, their hedges also move. And because their hedges also move, they're taking liquidity. And if you're not familiar with the term liquidity, it's basically proxied with like volume. It's really this concept of, if I buy and sell something, am I going to change the price of it? And in this case, liquidity is basically everything on the microstructure of the market. So the way that Nope, kind of imagine that it, or kind of represents the market is it looks at the weight of the dealer position, which is the net delta, and the weight of the normal underlying position, which is the volume. And you can imagine the effect kind of as friction. So as the price goes up of the underlying, it's going to increase the dealer delta, which I can talk about more later if you're not familiar with delta in the Greeks. But more interestingly, especially for trading, what we've noticed is that there's a tendency at these high values, either negative high or positive high. So negative 50, negative 70, positive 50, positive 70, for example. That basically the underlying, in this case, usually SPY, tends to reverse direction. And this is what we call the reversion hypothesis. It's, as you can tell by the name, still a hypothesis. We haven't proven it. We've been really, successful testing it both live and also on back tests. And that's, I guess, pretty much the brief explanation of what Nope is. I have a blog post on my blog, nopeitslily.medium.com, which, totally recommend you read if you like the nitty-gritty mathematics. What?
Shameless plug.
I mean, most of my Twitter career is shameless. So anyway.
As we all are as well.
Exactly. I mean, it's the era of social media. It's like, if you're not selling yourself, like, are you really, doing a good job with your life?
Exactly.
So that's why we're here today. So I guess like the best explanation really in this case is, like I said, friction. And what's interesting about it is, at least theoretically, and it looks like in practice, on certain stocks in certain situations, there seems to be some impact on allowing you to predict the market. And that's really why anybody other than like weird French quants or academics care about is basically, we see this weird effect. Can we exploit it to make money, just like you're supposed to do in a capitalist, society?
So if we can go back to SPY a little bit, besides SPY, what other index funds and exchanges would you expect Nope to work on?
I mean, for my proof, assuming again, like it's accurate, I wrote it late at night, and also it's not gone through peer review, so maybe it's not accurate. It should work always. I mean, as long as there's options on this ticker and a finite amount of liquidity, which is true for pretty much any stock, because you can't just make more stock continuously. You can, of course, sell more stock if you're the corporation, and there's other interesting cases. SPY has like redemption and creation of units. Doesn't matter on the day to day. Like ETFs, of course, they're not exactly equivalent to the underlying, but this kind of effect, especially on the time scale that Nope trades at, which is usually like an hour or 2 hours, that doesn't matter. So my understanding, and again, we're still in the testing phase, totally expect to tell you a different story in a month, basically on these tickers, but there should be a noticeable impact on pretty much any ETF you look at.
So one of the questions that we got a lot related to that was, should Nope be clearer on SPY than any other stock, as far as you can see?
So our hunches, and I mean, this is, I'm actually going to just pull up basically, you need to enable screen sharing.
One sec, technical difficulties.
It's our first time.
We suck at life.
Basically, I mean, I'm going to show how to like read the chart. Basically, if you look at our website, the nopetracker.com or Nope Tracker, I think it's now called nopetracker.com. I'll show you, why it does some weird stuff on SPY.
All right, I think you should now be able to share your screen.
So in this case, I'm on nopechart.com, and we see, for instance, on the 5th of February, this was nope versus the stock price. And a lot of people would look at this and be like, oh, it looks like the same thing. And what's actually interesting is it shouldn't be the same thing. There's multiple days where, I'll see if I can find an example if I remember exactly. Um, there's multiple days where they do not track properly. I think our guy building this, Sean, he's currently working on it, so it doesn't work exactly properly. But
Yeah, this looks great, by the way. So kudos to Sean on that.
Phenomenal dev. He is a phenomenal dev. It looks so futuristic and sick. What's interesting is that they do track. And that was kind of the key insight of like why we started looking at these reversions, because if you look at the NOPE formula, which again is on my Twitter, it's on my Scribe, it's on everywhere, it doesn't include the price of the underlying anywhere. Some people, especially the more astute audience here would be like, well, the delta of the option chains kind of gives you some idea. Yeah, it's like, okay, I get it. Like, you're right. There is some factorization of price there. But for instance, I think the day that I'm looking at on Friday, SPY moved like 0.3%. You're not going to tell me logically that all the intraday movement here you see on the chart is due to the price moving. I mean, there are situations like it's of course a factor here, but what's more interesting is that, these delta flows, because this is really what, NOPE is measuring on the intraday, that they do track SPY. And the reason we think that this is the case is because SPY is super liquid. And that's because when, for instance, someone buys a call or buys a put on SPY, the numerator of NOPE, which is the net delta, changes. But at the same time, because SPY is so liquid, the denominator also changes. And theoretically, at once, it should almost completely balance out and track basically the underlying price movement. Because, and the reason it tracks in the first place, and it's true for all tickers, that there is some level of tracking, is that when the market for the underlying is bullish, so when it's moving up, there's more call spot. If it's moving down, there's more put spot. And this is because, there's otherwise arbitrage opportunities.
So a question that came from a few people who might be on a little bit less experienced side who are now using NOPE for trades. On the days when SPY doesn't revert and NOPE continues in the plus or minus 100 zones, is it best to take the L or join in on the trend?
I think that's a good question. I mean, one of the hypotheses we're investigating is this idea of a negative gamma environment. And again, this is kind of high level, so if you guys want, I can also do a video on like options Greek for dummies. But when dealers, so the market makers, are short gamma, then by definition, if you follow the toy model argument from my blog post, then when you see a high NOPE value, it should actually accelerate the price trend. So you do see this a lot, that when it's negative, for instance, on SPY, you see a lot more jumpy, to put it in the most basic words. Like you see the price just tears down versus like going gradually. And the same thing actually happens, when it's really high up. So when it's, let's say, a really positive value like you see today, there's a lot more tendency, at least observationally so far, to see what are called liquidation breaks. So one of the reasons, for instance, reversions seem to occur pretty frequently to the point where, people, including myself, have traded on it, is that, when it's negative or when it's really positive, NOPE tries to get close to zero. And you can see even on, Friday, there were some pretty extreme values intraday. Like we saw almost 150 or 104, I guess. I'm not looking at the graph right. And that's a really high value. And, that doesn't occur by end of day very often. So what's more interesting though is on the negative side. So when you see negative 100, the reason that I tend to warn people, because on the positive side, it tends to work better, even these extreme values. You can see even on Friday, after my warning, it still went down. You would have made money playing it. But on the negative side, the reason is that there's usually a lot more liquidity when the market is selling off. When the market is selling off, it isn't that people are, not, it's not that you're not impacting the price by selling it, but it's that selling pressure begets more selling pressure. So when the market starts going down a lot, more liquidity, just appears because people are panic selling their shares. So that's why historically, if you look at our back tests, going long right now doesn't seem to perform nearly as well as going short. And, do I think that's necessarily the case forever? No. But I still do recommend, if let's say NOPE had hit, negative 98, probably would have taken the L myself, it would have worked out for you here. But I know like historically that it doesn't work out super well. It's kind of skewed by the coronavirus crash and data too. So maybe, again, I'll have a different answer for you in a month.
I remember when we first started doing this and kind of taking a few trades here and there just based on our own kind of due diligence, it seemed like every time either of us bought a put, and obviously this was like pre-NOPE, anytime either of us ever bought a put, we like had to take the L. Like we got stuck with it. We got stuck holding the bag every time.
I mean, you're basically fighting a market and trend. I mean, puts on SPY work pretty well intraday historically, just because, this is one of Twitter's favorite topics. Like if you look from 1995 onwards, if you look at the intraday, the expectation of the amount of profit you're going to make during the actual market hours is like zero. It's really close to zero. What most of the money or most of the market actually like going straight up is overnight. So I mean, a lot of traders are really skeptical about going short or buying puts. It's super common. I hear it all the time. In this case, it works. I mean, if I had to give, like, if I was a betting person, I would say I would rather use NOPE right now for buying puts than buying calls.
Yeah. And another question that we get a lot all the time is, in addition, or instead of NOPE being daily, is there something to a weekly NOPE from your observation?
I mean, we know that like weekly, like NOPE is autocorrelated. So what that basically means is, the NOPE of today is similar-ish to the NOPE of yesterday or the NOPE of the day before. Like it's obviously not always similar, but there's a relationship there of some sort. The formula that as it is doesn't really work for weekly or daily, and it doesn't really make sense to like, I mean, at that point, you're just basically, you're going to look at the open eye or open interest, and you could do that. And I think that is important when you're actually looking at, this Q property, which I talk about in my blog post. That said, I'd be very reluctant to believe that, a weekly NOPE would work. I know, for instance, when I trained my model that I talk about inscribed on the end of day NOPE, that I did pass it in, the previous 5 days worth of NOPE, to get the results that I did. And I do talk about it in my blog post, what, these factors are. I think, if I was to make a model of this to predict, the end of day forecast, I would, use multiple days worth of NOPE values, but I wouldn't make a weekly version of it per se.
And going back to kind of the factors that the NOPE formula considers, are there any other factors that aren't currently in the NOPE formula that you'd consider adding? Are there any that are under consideration right now?
I mean, I don't want to give away all of the alpha from our future hedge fund, Monica. I mean, a lot of it is pretty obvious, I'd say, if you read my theory on it, and also understand how market makers work. Market makers do not hedge continuously. What else? Some percentage of it is not hedged in the underlying, especially on ETFs. First off, the basic formula only looks at everything as buy to order. So like if there's been days, for instance, where the calc has been completely wrong just because we made that simplifying calculation, obviously it doesn't handle spreads properly. It doesn't handle, calendar spreads. It doesn't handle who's selling what. So it's a very, like I say a lot, it's a very rough formula. It will give you some inkling if you look at it basically statistically, because, these relationships, like how often things are hedged, what, percentage is hedged in the underlying, when market makers hedge. I have no proof on this. My understanding is it probably is fairly stable over time to the point where you can make, some fairly robust correlations. If in an ideal world, and I get asked this question a lot, I would consider every factor. Here I would build this complete picture, like as complete as I could, picture of the dealer delta imbalance and see if it performs better.
Can you explain, to kind of give a little bit more insight into the formula without giving too much away, but can you explain why the denominator of NOPE is total shares trading volume instead of total options volume?
So this is funny. I mean, the original version, it was total option volume. We had two
That was NOPE
properties.
phase one.
This was back when I wrote a paper on it, and I think I stayed up till 3 a.m. and I was like, oh my God, this thing that I keep talking about, the law of surprise, is like a real thing. It's the first law of asset pricing, applied to derivatives. The reason is it doesn't have any more extra info because NOPE is a liquidity-based system. It works because it measures the liquidity of the underlying. So it doesn't really make sense in this case to look at the options volume. They are heavily correlated. You're going to see a lot of volume in options sometimes if there's a lot of volume in the underlying, but only the underlying volume matters because the whole skew effect of NOPE is that it is related to the liquidity of the underlying. It's not related to how many options are out there. It's not related to how much average delta there is per option. It doesn't matter.
And can you explain a little bit about one of the questions that we got was, how does the need to apply liquidity to time t affect future liquidity?
Sorry, could you repeat that?
How does the need to apply liquidity to time t affect future liquidity? Does it pull liquidity toward forward from the future, or it seems like it would exert a gravitational pull until it sucks all liquidity in?
I mean, it would. I mean, I don't have a good answer for that question, to be honest. I probably need to follow up with the person who asked it because I'm not exactly sure what they meant. I mean, there is never a fixed amount of liquidity, in an asset. Market depth is not static. That's why the order flow readers, what they tell you in the morning may not be true an hour after trading. They're doing their best. They're using the data that's there at the point where they read it. But, really that all that matters for NOPE is that there is a fixed amount of liquidity. SPY today, for instance, roughly there's going to be a maximum amount of liquidity that there could be for delta hedging, and that's related to how many shares were traded. That's why it's a very rough estimate and it doesn't hold at every specific time t in the day, but it is a cap on what liquidity has been actually used in the system. I would say it's like an upper bound. Probably a more precise measurement would be looking at the instantaneous delta traded and the cumulative delta traded versus the existing, market depth at the current price level. You can go read some papers for that and try it out and tell me how it works. But my philosophy is keep it simple, stupid. If it works for you, why fix it?
As the philosophy that we pretty much apply to everything in life at this point.
I mean, basically, it's like, I don't want to do more work. Like, you can go read a book or something and make it better.
So the last question that we have on NOPE, or at least the last one from the Twitter thread, was, if the theory is that certain NOPE levels tend to signal when dynamic hedging has produced gaps in liquidity, do you agree that it's probably the most valuable to confirm one's order flow analysis than a standalone signal?
I mean, yeah. I mean, if I was tomorrow to build a trading bot on this, I would not use NOPE as a standalone signal. I mean, it's good for back testing, it's good for same-day checking, it's good for the toy model, but it's just a signal. I don't think anybody sane is using RSI as their only signal, or VWAP, or basically any other, weird whatever everybody trades on. It's just a signal. I mean, a lot when
I think you might be surprised by that.
Like, I will call reversions based on just nope because I am the creator and I'm trying to test it. But would I recommend you trade if nope is telling you something and everything else is telling you not to do it? Probably not. Even if nope is right, it could also be wrong. So just use your logic. Obviously none of this is investment advice. None of this, nope is not telling you to go buy GameStop, just buy what Wall Street Bets is, saying treat it as an indicator. It's a cool indicator, I think. There's a lot of interesting work to be done on it. There's a lot of cool people working on it, but it's a simple indicator. And that's really it.
That's good advice for all you people out there on Twitter who are trying to understand nope to make lots of money without really understanding how it works.
I mean, I feel you can, like in the basic case, like for instance, on Friday, I think it recommended like 5 or 6 trades that all worked. Like it seems like free money then, and it's not free money. I mean, you're still taking risk and whatever, but there are days it doesn't work at all. There are crash days. My job is I'm trying to educate people and also investigate this, but use your caution, please. And if you move scale on it, do not tell me. Please do not tell me.
You'll give Lily an aneurysm. On that note, kind of like how you wanted to start educating other people after you kind of figured this out and started exploring the market on your own. What motivated you to start your Twitter account?
So, I mean, I was an early person on unusual whales, which is a pretty popular option sweep tool. Actually consider him, an online friend, hopefully a real friend when this pandemic is, or not a real friend, but an in-person friend when this pandemic is over. I was advised because basically way back when we were doing earnings predictions with Nope, I have a funny story about that. Our data source was bad. It looked like it was performing a lot better than it should. We still don't understand exactly what happened there. So people were like, oh, it's cool you're posting this on Discord, but, I don't want to check Discord always. So I'm going to make a Twitter. So they told me to make a Twitter. I was also encouraged by my friend Final October / Patrick, who hopefully this will inspire him to make his own podcast and show. He's super interesting character as a person. I mean that in a good way.
Everybody should have a podcast because we need more of those.
I know, right? You're not allowed to not have a podcast in 2021.
Are you even a person if you don't have a podcast?
Exactly. So people encouraged me to make a Twitter, and then I just met cool people on Voltwit. Volatility Twitter. I was really stupid when I joined. I'm still pretty stupid, but I'm less stupid. So, shout out to people like Chris Abdelmessi. I'm really reluctant to pronounce your name because I'm going to fuck it up. Alex Good, Sam Carson, Ben Eifert, y'all are great people. So it's been fun.
It's been kind of a wild ride. I remember when you first started your Twitter and then all of a sudden it was like there were a few more thousand followers per day and just more and more of them. Like, does the pressure of having kind of a following now and people that are not only following your trades but also your shit posts and personal stuff, does that ever kind of get to you, or how do you deal with that?
I mean, it's surreal. Like literally since the GameStop affair, where I think the only reason I wrote a post on it or 2 posts was someone literally encouraged me in my comments on Twitter. They're like, I think I posted like all the articles on Gamma Squeezes are shit right now. And they were shit. I'm not taking that back at all. Basically, and I just wrote a post and then it blew up more and more. And it was weird even in like December, when basically you could see things were moving up, more people were looking at Nope, especially when I started calling out reversions. The first time nobody was listening, then the second time everybody started listening, and then now it's like 100,000 views on the Nope tracker, and it's like our server blew up on Friday, and it's just been like such a weird experience. I never if you had asked me last year, like, could you get, popular talking about finance, I would have probably said like, no, like who effing cares about options? And, I'm trying to, wrap my head around the current situation. I'm trying to produce good content for people. I'm trying to like, be as genuine and honest as possible. It's gotten pretty overwhelming lately, so please give me some slack. I am not a hedge fund manager. I am not a professional. I am just someone who wrote about options and everybody started reading it.
Yeah, and on that note, someone who really doesn't appreciate your presence on Twitter is Tesla short guy Jim Chanos. Can you explain what you did to get blocked by him?
I have no idea. I mean, I get sometimes blocked by random people. I get sometimes retweeted by random people. I think I was following him early on and I might have commented on one of his threads. I'm pretty annoying. I post a lot on Twitter because I like talking like a lot. I mean, I did not expect it to be retweeted by Michael Burry yesterday. That was wild. I still have no idea how he found out about my blog in the first place. So why, Jim Thomas doesn't like hearing from me, like maybe I'm just too loud or something. Does it matter? No, I just thought it was hilarious.
It is really funny. Wear it as a badge of honor.
I mean, at least I made more money this year than probably most short sellers, if not all of them.
Also, on the more positive note of kind of your newfound presence on Twitter, what has been kind of the best part of that for you?
I mean, a lot. Like, I guess for me, as like a researcher, getting access to like quality data. I mean, there's awesome people like Convex Value, Big Tech. They're literally the best. They've given me a lot of the data we've used to like do our research. Networking with interesting people, talking about memes and having people read about that's pretty cool. Yeah, I mean, it's just so many interesting things. I did not expect my year was going to turn out like this. Let me put it that way.
Yeah, I mean, I don't think either of us did. It was crazy that we were literally just like sitting in my room thinking about the market and just barely starting to get into trading options, starting on Robinhood, and then it all like turned into this. I had a moment a little bit ago when I was watching you walk through kind of the platform, and I'm like, now this is a thing. Like there's a fully fleshed out platform built around it that looks great, and it all started from nothing.
I know, literally. So, I mean, I started talking about this in like August to people, and most people thought it was so annoying. Like, I have probably bothered you and Stormy so much about talking about the market and like options in my model that multiple people have probably muted me on Discord and also on social media just for being that annoying about the
Really
market.
fucking annoying, man.
I know, I'm really annoying. And it kind of like got validated when like September 3rd hit and I was like warning people on September 2nd to get out of the market.
Crash.
But it really took like a new dimension over the past like month or two. Like people, it went from this, like as I described it went from like a science project to like a paper, which people downloaded in like November, to hedge funds asking me how to implement my model, to like this. So, I mean, I'm pretty sure this is a simulation, so that's probably what happened.
It's your world. We're all just living in it. On that note, where do you think kind of your platform and also like kind of your exploration into the market, like where do you think it will take you next? Is there something specific that you want to do as far as maybe like developing further models or getting into a new aspect of finance? Do you want to do this for a living? Kind of like, what do you see in your future?
I mean, we're supposed to start Big Boy Capital. We talked about this.
Yeah. And I mean, on that note, I think you and I have kind of like talked a lot about how like neither one of us expected any of this to happen. And now that it has, we're just like, what can we do? How can we like educate people, but also like use what we have to do good in the world. So, I mean, kind of part of that was when, you and I were making a lot of money, and if what felt like benefiting from some of the volatility going on in the market, in the world, and politics, you and I kind of tried to donate some of our profits to good causes that we believe in, to not feel quite so bad about that in a time when there's so much turmoil in the world. But also, we really do want to use this platform and also hopefully this channel for good, to educate people, and also kind of for the betterment of everyone.
Yeah, I mean, I've been really happy as part of like the corporation, working with like Final October and people like Alex, some people may know him as Falcon. I mean, we raised a lot of money, from our members in late December. We sent a lot of money directly to people who needed it through GoFundMe. Other people on Twitter retweeted it. Some whale, some lovely person actually once donated $2,500. Through Sean's Nope tracker, especially in the early stages, we got like 300 people signed up for premium, which was ridiculous. Which, if you don't know about the premium, back then it was literally, it went straight to Feed America. We never saw a cent of it. And it's been super cool to like have this platform. And, I really want to make sure, people have jokingly asked for like Nope is dope merchandise. I'm totally for it.
We're
We're
working
gonna try to
on,
make
by the
the
way.
video. What?
I said, which we're working on, by the way.
I mean, we're gonna work on it, but all the proceeds, again, straight to charity. I don't want to see a cent out of this. I'm not here to sell you things. I'm here to learn. I'm here to talk. I'm here to be annoying. If I wanted to sell you stuff, it would be behind a paywall.
Exactly. Yeah, so I mean, that's all the questions that we have from Twitter. Lily, do you have anything else that you wanted to go over before we end?
No, I think so. We're hoping to bring, the actual Nope team. So, this hasn't been just me this whole time. It was multiple people. I've mentioned some of them on Twitter. Some of them don't have Twitters. Like, we wouldn't have been here if it was just me. I need people to understand that. We have probably 10, 15 people who have contributed massive amounts of development help, data. It's really been like a collaborative process. And, I'd love to, hear their thoughts about what went well, what went wrong, their takes about Nope. Would love to talk more about options and even like the meme theory stuff I've talked about on other podcasts. Would also love to bring cool people, if anybody's interested and wants to share their story. Doesn't need to be a CIO, doesn't need to be a high frequency person. Anyone who wants to, has something interesting to share, let's hear them.
Yeah, we're really hoping to use this space kind of, like I said, like for education, to bring a spotlight to people who might not otherwise have it, but they have something cool to talk about. That's really what we're here for. And I guess as a kind of closing question, what advice would you give to people out there who are just starting to learn about the market and want to get into trading?
I would take it slow. I mean, literally the number one rule is risk management. You are not going to statistically be the next millionaire. You're not going to make $1 million off the next Tesla. Statistically, you're going to lose money, especially if you do options trading. Like, it is a game that's rigged against you. I talk about this a lot. Other people talk about this a lot on Twitter. You need to be methodological. You need to have a system in place. Where people really screw themselves is not managing risk, not managing their emotions, being low information in general. Options trading is not free money. There was a time when everything went up and that was cool and you didn't need to know about Delta or IV or any of those concepts. You are going to blow yourself up if you do not learn them. Like, my advice for a new trader is take a lot of time to learn. I'm not saying spend 6 months, buried in books and picking up like Niedenberg and, Sinclair's books, which of course are lovely on options trading. It is a very mathematical game. I think a lot of people do not get how mathematical it is. At the end of the day, the important part of the game is you need to stay in the game. It isn't maximizing your win or YOLOing. Like, you need to stay in the game. And the only way to do that
My
is
favorite
to
thing,
what?
YOLOing.
I know you're the more risk-loving person between us. Basically, you need to stay in the game. You need to size your position accordingly. Otherwise, it's maybe you win the lottery. Would you spend? I guess a good example is like basically buying call option. Let's say you buy a call option on Tesla that's severely out of the money and spend $1,000. Chances are it won't hit. That's kind of how Delta works. Ask yourself, would you do the same thing and spend $1,000 on lottery tickets? And if the answer is no, maybe you're not trading properly, because trading is not about gambling. Trading is not about having the highest P&L. Trading is a system. Trading is an iterated system of being right slightly more than you're wrong. And that's really my advice. It's an interesting system. I love the market. There's so much data. There's so much going on. It's probably the world's biggest dynamic system. But most people, I feel, are probably not suited to trade.
That's really solid advice. All right, well, thanks for being here today, and that concludes this session of Live from Our Bedrooms. In the future, we probably will have some more NOPE and market related content, definitely, but hopefully in future episodes, we're also going to incorporate some other stuff, product news, technology news, and you'll be seeing us again soon. So
yeah, definitely. Also, just please in the comments, tell us what you want to see, what you don't want to see. We're just trying to
literally have no idea. So if you have some suggestions, if there's anything that you guys want to see, just let us know. We're here to educate.
I'm entertained. Bye, guys.